In this video, we're going to go over another basic concept of international political economy, namely the balance of trade. And we're going to show that when we focus on the balance of trade, international trade becomes a prisoner's dilemma. So what's the balance of trade? I've given here on this slide both a sort of technical definition as well as just a common sense one. It's the difference between how much a country imports and how much it exports, right? So as it gets measured by economists, you take the total value of a country's exports and you subtract out the imports. And when we talk about a trade surplus, it means exports have exceeded imports. When we talk about a trade deficit, it means the opposite, right? That countries are importing more than they're exporting. And there's a pretty big debate about how important this is. Liberal theorists are going to say it's not really that big a deal. As long as what you're buying is something that you want, it doesn't matter that you're giving money to somebody else. That's how economics works. Realists in particular, and to some extent economic structuralists, are going to make a big deal out of the balance of trade. So why should we care about the balance of trade? Well, one of the reasons that you don't need to worry too much about yet is the effect on what's called the current account. That is to say, if more goods are flowing in than are flowing out, then it means more money is flowing out than flowing in. And this sometimes causes problems because it sort of implies, right, that over time wealth is moving elsewhere. If we think of wealth in terms of money rather than goods. It can also have an effect on exchange rates, which I discussed in the book, the relationship between trade and exchange rates. But the real reason people care is the second one, is the implied effect on employment, right? The idea that if you're exporting more than you're importing, right, running a trade surplus, other things being equal, and I would stress that, other things being equal, there's going to be more people employed in your country because they're not only making enough stuff for all the consumers in your country, they're making enough stuff that people are buying elsewhere as well. So just as any firm wants to export, because that essentially means they get to sell more stuff, labor is trying to do the same thing, right? Labor wants more exports because that creates more demand for labor, means that we don't lose our jobs, our wages go up, and so on. Okay. So the liberals are going to ask this question, right? Who benefits from U.S. trade from China? And they're going to point out that we all benefit from trade with China every time we buy something from Amazon or at Walmart or wherever we buy our stuff, because we're all like saving money every day because the stuff that we buy from China is so much cheaper than if we had bought it made by a more expensive labor somewhere else. Who loses, however, is anybody who loses their job because it can be done more cheaply somewhere else. Or to put it slightly differently, people whose wages are kept low because of the danger that if the wages go up, or the threat that if wages or benefits or workers' rights go up too much, that the jobs will get moved to some place with lower wages or less protection for workers. It's also the case that governments lose because the taxes that people make, or the taxes people pay on their income are lost if those jobs are being done somewhere else. And it's for those reasons that balance of trade is a gigantic issue in U.S.-China relations. You remember President Trump making a big deal about saying China was giving us a raw deal in trade. That basically had to do with the balance of trade. And one of the things that he was trying to do was get the Chinese, on the one hand, to make it harder for China to sell stuff in the United States, but he was also trying to get China to commit to buying more U.S. goods to sort of balance out the flow. In the past, it's also been a big issue between the United States and Mexico, United States and Canada, and so on. Those are the three countries we tend to hear the most about because those are the three countries we have the most trade with. But that's why people care about it. It's really for its impact on employment. So now what I've done in this slide is I've brought back the prisoner's dilemma. I'm sure you're all overjoyed about that. And I've redone it in terms of tariffs, right? And so this basically here in the upper left is what we have a lot of in the world these days, right? Which is countries who have agreed to keep their tariffs low. Think about the European Union or the U.S., Canada, Mexico Free Trade Agreement, or in a much more general sense, the World Trade Organization. We'll all keep our tariffs low. That way we can get the benefits of comparative advantage, right? Just get everything made where it's most efficient without it necessarily having an advantage to anybody. what some people are going to say it would be the ideal world is for you to have high tariffs and other folks to have low tariffs. And essentially that would mean that you'd be able to sell lots of your stuff in their country, but they wouldn't be able to sell stuff in your country. The good news there is that drives up employment in your country. The bad news, as I've sort of stuck in here in a note at the bottom, is in that situation, your employment is probably going to benefit, but your consumers are going to lose because they're going to be paying higher price for goods because they're not being produced where they can be produced most cheaply. But the worst situation, many people are going to say, is this, which is basically a trade war, right? You raise tariffs against them, they raise tariffs against you. This was the case at the beginning of the Great Depression in the 1930s, and some people see this kind of thing happening again now. This essentially, right, when Britain chose Brexit with the European Union, they basically said, you know what, we're going to go from here over to here because we don't think we're getting, we don't like the deal we're getting here anymore. So now, just to take things one step further, and I want to say here we're pushing into something advanced. This is not something I'm going to test you on, but this is another really important concept that will help you understand a lot. And it's this notion of the Pareto Frontier, which was named after quite, what's the word I'm looking for? An Italian economist of the 19th and early 20th century who made advances in fields of engineering, versatile, that's the word I'm looking for. He made advances in engineering, he made advances in sociology, he made advances in economics. He was quite a whiz. But it's basically this idea, right? And here, what I've done on this little graph here is I've taken our outcomes from the prisoner's dilemma, and I've now graphed them, right? So the numbers aren't quite right on the axis, but you get the idea, right? 1, 2, 3, 4, right? 4, 3, 2, 1. So I basically just put them on axes. And the point that Pareto makes, as it relates to this at least, is that if you're at this point, or this point, or this point, right, the only way for one player to get better off is for the other player to get worse off, right? If you're the player getting 1, that might seem like a raw deal, but there's no way for you to get more than 1 without the other player getting less than 4. And in that's the definition of Pareto optimality, right? The Pareto optimal is a solution where the only way for one player to get better off is for somebody else to get worse off. So a different way of putting it is that when you're on this Pareto frontier, you are in a zero-sum game. When you're here, however, defect, you're both getting 2, there's all kinds of room, right, for both of you to get better off at the same time. In fact, if you were to draw a line from here horizontally to here, right, anything above that line and below this curve is going to make at least one actor better off without making the other one worse off. Similar, anything to the right of a vertical line through that dot is going to be the same thing. So there's this whole big triangle of space that's better than this. But here's the question, right? And this is, so whereas liberals focus on how do you get from here, off the Pareto frontier, onto the Pareto frontier, how do you get a solution that's better for everybody, realists want to ask this question, what determines where you end up along this frontier? And along the Pareto frontier, it is a zero-sum game. The only way for one actor to get better off is for another one to get worse off. And so I like this diagram because I think it's a nice way of illustrating graphically when you might be in the kind of situation that liberals are pointing to and when you might be in the kind of situation that realists are pointing to. And the point I really want to get at then is one is based on one problem and the other is based on the other problem. And so to the extent they disagree, it's because they're talking about slightly different situations or assuming that the normal situation might be somewhat different. The liberals basically say, look, as long as you can get from here to here, where you are along here is not such a big deal. We don't really ask about that. For realists and for economic structuralists, what they really care about is this question of how the gains of trade are divided. Where along the Pareto frontier are you? So we'll see more about that debate as we go forward.